Stock tip. Best stock setups.
Hi, and welcome back to this week's final episode of Stock Tip Daily Update. I am Untitled, and this is what happened in the markets today. So the markets, respectively, the S&P 500 started out a bit bearish today and had a pretty big fall from grace with minus 1%. Nonetheless, in the last few minutes, I think in the last half hour of trading, the S&P 500 managed to climb up again and finished above the 9-day moving average, actually adding a plus 0.3%. And that's all that we needed. So this is the first positive signal in 3 days now that we've got. And by finishing above the 90 moving average, there still is a bit of hope that this rally might continue next week or the week after that, and that we might still be able to break above the previous all-time high here. So I'm still pretty optimistic, pretty bullish. And I think there still is enough reason for that. We are going to get through it in a couple of minutes or so. Let's see how the Nasdaq has done. The Nasdaq has also managed to finish above the 90 moving average after falling for a short time, falling beneath it. The Nasdaq finished with in the negative, but only just slightly in the negative. I'm still positive that this rally could go a bit further here. So why am I so positive? Well, if you take a look at the biggest stock titles here, Amazon, Apple, and companies, well, you see here Amazon has broken out, and this is only a pause for a fresh breath of air, I would say. So this is something normal that we would like to see here, a small pause, a small pullback for sustained growth. And this is exactly what we've received. I'm also pretty happy to see that the volume in this small pullback is not that huge. It's definitely not bigger than the volume in the uptrend. And as such, it still remains, for the time being, just a pullback. Are we going to fall beneath the 3,185 point? Then we could begin to question this rally in Amazon. But until then, I think we can breathe easily and still enjoy this pullback as a new buying opportunity. As next, Apple. So Apple has grown exponentially here, so effectively exponentially here. It almost reached the previous high in just 2 weeks' time, and now it has retracted a bit. So again, this is a nice retraction. This is a healthy retraction, because the more exponential this growth is, the greater the pullback is. So if we get an exponential growth of 50% in just a couple of weeks, then I think the pullback is also going to be major, and this won't be sustained. That's why always when we reach the top, or when we reach a major resistance line so vertical, then a pullback is 100% there. So in 100% of cases is there. You can't take it any other way. So I still think there is some magic in the markets. I don't know exactly if the pullback in Apple is going to stop here. It might just go next new level further. Respectively, it might reach the 20 moving average, it might reach the 50 moving average, but I still think it's okay. So as long as we don't close beneath the 50 moving average, I'm okay with this pullback, and I still consider it healthy. Even if it lasts 1 or 2 weeks, I still consider it healthy. And I think this is the major market maker at the moment. This is where the impulses in the market have come from this last couple of 2 weeks, from this blue chips here, Apple, Amazon, and company. Then going further, IVM. So IVM is actually consolidating, and as such is still looking very good, and like I've said, there's still some energy left in the market. Also, the German markets managed to negate this hugely bearish candle here, and has finished again above the moving averages. So here you also see resistance from the bulls. From the bulls part, the bulls are not ready to throw in the towel just yet, and that's okay. That's what we want. Euro to US dollar has remained on the same level, so it's still there, and if the market is going to start again next week, then I could see the Euro to US dollar start going up again, but this is pretty much dependent on the rest of the market. Oil, then again, oil started the day in the negative and hasn't moved too much either. We are still pretty much in a consolidation phase, and I think the earliest we could see some action at the end of next week or so, but not quite. We are not quite there. And gold, the same here. I shall look at it in the weekly chart. So gold has remained pretty, I admit gold has remained pretty bullish. I expected somehow of a bigger correction here, and I expected that we would already have reached the 20 weekly average. It wasn't meant to be, so it didn't happen. So I'm pretty bullish on gold. I think gold is going to start sooner than later, and well, in my opinion, this is where the resistance line, where the support line is in gold, and I think we might just have ourselves a buy above 184. So above 184, this would be a nice buy. Or so I don't like I don't like trading gold in the daily chart. But if you do, then above this trend line. I don't like it because of the gaps here. There are gaps all around. Gap here, gap, here gap. But the negative gaps are monstrous. So here a gap, and here gap, here gap. So that's why I don't trade gold in the daily chart, but I do in the weekly chart. And I still think a sure breakout would be above 184. And silver, pretty much the same story here in silver, and only that the breakout in silver, I would say, would be above this week's high, so above 23. You can take either one of them. They both look pretty much the same, but I still think in the weekly chart, gold still looks a lot better and a lot more powerful. Okay, now I had a question from Citizen M, and Citizen M asked if I think the inversion in the 2 and 10-year yield curves would mean a recession, if a recession is on the horizon. So I would like to start by showing the results and the probabilities of this. So when the curve inverts, there has been a better than 2/3 chance of a recession at some point in the next year, and a greater than 98% chance of a recession at some point in the next 2 years, according to Bespoke. So that means nothing for me. That means we could see a recession this year, we could see a recession next year, we could see a recession in the next 2 years. Also, this is for me just a bit of a noise. The last time the curves inverted was in 2019, and then we had a big fall from grace here in the pandemic. So when the pandemic came, so a big crash. I would name it a crash here, not just a recession. But again, the curves inverted back in 2019. I think here somewhere inverted the curves, and the crash came here. So do I fear a recession now? At the time being, no. What's going to happen next year? I don't know. But I think this is just a bit of a noise, and I don't know if you've read Robert Kiyosaki. Robert Kiyosaki was always talking about chicken littles. So chicken littles are the ones that are always running around screaming that the end of the world would come, the end of the world would come, the end of the world would come. And sometime one day he's going to be right, but one day this doesn't mean that the end of the world is here. So when the end of the world comes, and one of 100, one of 2,000, one in 100,000, then he is right, but it doesn't mean anything. And if the recession comes, that's not to say that this wouldn't be effectively something bad. So as you remember, we've made some money here on the first round. We've made a lot of money here, we've made a lot of money here, and we've made a lot of money here. Since then we've been losing a bit of money, but since the beginning of the rally, again we've made up a huge score here, and I'm hoping for a continuation if the rally is going to continue and we are going to hit the all-time high here. So a recession doesn't mean anything other than a huge opportunity. If you wait up a couple of months, here we had to wait 2 or 3 months, and if you patiently wait, you might just, and follow stock tip, of course, you might just be able to get a good position in just at the right opportunity, just at the right moment, and then you see a growth in the markets of 11% in just 2 weeks. So this is something phenomenal. This is something that you would see in a year or so, and we had it in 2 weeks. So this is, in everything, also in a recession, is a great opportunity. Nonetheless, there is another reason I don't think a recession is coming. Respectively, the next target would have actually been here 3,600, in the 3,000, at least 4,000 in this current correction, for at least 4,000, and more realistical would have been 3,700 or 3,600, which we didn't get. You can take a look at this COVID crash. It was very, very vertical here again, and in 2019 or 18-19 we had also a big move down. This time around we had a lot of resistance from the bull side here, a lot of resistance from the bulls, and this pretty much wasn't a vertical fall. This was pretty horizontal and pretty slowly and steadily. So there wasn't that much momentum there in the markets, and the bears weren't ready to take over. The bulls had many opportunities, and the bulls have issued a lot of pressure here, a lot of buying pressure, and the markets didn't fall. The markets have remain pretty much stable. This was not that huge. So in the past we would time and time again see a 30%, about 30% correction every time we've reached these highs, and now we've only seen 12 or 13%. So I think we are still on the safe side, but I might also be wrong. I don't know what's going to happen, which war is going to get triggered again, and what's going to happen geopolitically. But from a technical standpoint, this is how it looks. Okay, then second part of the video, the portfolio. In the portfolio, I've added some stocks yesterday. I couldn't help myself, and I've added BBO, BridgeBio Pharma. So I've added it, and for me it looks very, very bullish. This is one of the latest setups, which I discuss always in the third part of the video. I've also added CAR here. The breakout, it's retracted a bit, but I like the volume, and my stop is here, so not that much of a tragedy if it goes out again. I like the volume, I like the setup, I like the momentum, I like everything. I wanted it. And then I still have Microsoft. Microsoft has pretty much mimicked the move in Amazon, so it looks pretty much the same. Vertical move, or pull back to the 9 and perhaps to the 20. Then I hope a continuation of the breakout, of the rally. Nvidia has made something of a bigger pullback here. My stop remains here. So I still have a little room to go. I don't like the volume that much. I would have liked descending volume, but it is how it is. I'm still long. I'm still long here in Nvidia, and I'm remaining as long as I can. So if I get thrown out, then I get thrown out. But until then, I remain. And PayPal has actually had a positive day here, so my stop is still here. And PayPal has not quite broken out, a nice pullback again, and let's see what happens next week. So we are in between these lines. As soon as we break above the 200, the 50 moving line, then I think we have a green light for the next move up. And lastly, I added Zynga today. I added it before the breakout, a small position in Zynga before breakout, very small position with a very small risk. So basically my risk is here at 9.17 or 18. I think this is where my risk is. Why did I add it? So this is on my watch list for so long now, since January. This has been on my watch list, and I think here somewhere I've already activated an order, and here is where my order got bought, and at the end of the day I've sold it, fearing an outside reversal here. So the outside reversal didn't come. There is a lot of buying pressure here, and I like the buying pressure, and so I would have expected another move down, like we've seen here the last time around. We had an outside reversal here, another move down. Well, it didn't come. This would mean there is a lot of buying pressure from the bulls side, and then I'm happy with it. I like the buying pressure. Then I would think of it as a consolidation before the breakout, and a small position doesn't hurt here. Okay, that's my portfolio. I can start with the third part of the video. If you do have any questions, don't forget, you can always leave them in the comment section below, and I will try to address them as clearly as I can. So if you like this video, don't forget to like and subscribe, and I will be returning next week with some more nice setups.